Away we go. All right, welcome everybody. Saturday Sweep Series, Wall Street Jesus here. We are open to the public today. We haven't done a Saturday session where we were open to all of social media in a while, it feels like. We forgot you guys for a little bit. But welcome everybody. I see you guys on the Tuesday webinar for the most part anyway. Saturday's a little different. Saturday we like, Tuesday we try to get it an early look on what the rest of the week may have to offer. And these Saturdays, we like to really take all the information, all the evidence that we piled up throughout the week, and basically trying to get an idea of where we stand going into a new week, both on flow, sweepers, and even in these type of markets, more importantly, sentiment. We'll talk about how the two line up again going into next week, and the good and the bad, and now that a lot of you tweeps are on here from Twitter, I know I get the reputation of a perma bull, and I'm proud of that reputation, by the way, just so you understand. So don't feel bad. But, on these Saturday sessions, we also like to go over what may be concerning, okay? And there have been some things of late, even though, even prior to this pullback, of some things to keep an eye on that we just don't like to see, okay? And I think both ends right now, both in flow and on the sentiment side of things, are there are a few things that are concerning, and we'll go over that and what to keep an eye on, how to prepare for it, and what it means, more importantly. All right. We'd like to start off the webinar. Let me first, before I forget, okay, because I'm going to get bummed with questions. Anybody, if you're new and the terminology, I got my own slang, okay, so it can get a bit confusing on here. Your best bet, you go to wallstreetjesus.com, okay, and there's a strategy section, quick, easy to read blogs, little post that basically you could get a little more familiar with what we're talking about, what we look at on a day-to-day basis. All right, so it's wallstreetjesus.com. You could grab the link off my Twitter as well if you had trouble with the spelling. ST, I get that a lot. Not the word street, wallstjesus.com. All right, so we'd like to start out talking about what we saw this week and how it lined up coming out of our last Saturday webinar and what we were looking for. And basically, it's pretty much similar to what we got now. A couple little tidbits, a little different, okay, but pretty similar to how we're lining up going into this coming week, okay. And if you remember, we had a nice pullback, right? A couple of weeks leading up into the last Saturday webinar. We were hoping for that for a long time now as things got stretched and overheated to the upside. But more importantly, what we started to see it make a dent as far as retail sentiment is concerned, okay? And when we're in this type of environment, and I guess this is a corrective environment, all right, it becomes a lot more important. We talk about what's more important, sweeper activity flow or sentiment, and it depends on the climate. I wish it was as easy as an answer saying one thing trumps everything else at all times, but when you get into these corrective phases and the volatility, more importantly, the entries, they become important, really important, okay? Because if you're buying at the right time, even though you're right, because of these wild swings, you can get yourself stopped out a lot easier, put behind the 8 ball for the most part, and stuff like that. So that's where I think sentiment, again, you can't use it as exact buy sell signals, but like Ani, who's a member for a while, mentioned it, it's a compass, okay? It gets you in the ballpark of where a solid risk reward entry would be on the swing side of trades, okay? So last week we had where we had that selling, we had a lot of our short-term indicators line up, okay? And basically what they tell us is that any further weakness, Okay, and that's what these signals tell us. When they flash bullish, it tells us any further weakness, we need to lean bullish now. Okay, because when a market's selling, right, you're always concerned, how much more selling is there left to go? How much lower can we go? That's what holds you back ultimately from getting long at any point in the sell-off. And what the sentiment signals tell us, they tell us, or they give us an area, a spot where we can at least start to look for entries, and where the downside should be limited, and even more importantly, presents a solid risk reward to the upside. All right, and the reason why the downside is limited, it's not some magic signal, crystal ball, or anything like that. The reason is because our sentiment signals are telling us that whoever was looking to sell has likely already sold. Okay, whoever was looking to was nervous and looking to put on protection already put on protection. All right, and when you have the crowd, and that's what we're looking for at extremes, right? The only time sentiment's important is at extremes. When you get to an extreme and you have the crowd all on one side, the reason why you see the total opposite happen is because, let's take an example of last week. If everybody already was selling into this downdraft, all right, and everybody had ample time to hedge and put on protection and bet on further downside, okay, that tells us that the likelihood is it's already done. And any piece, any trigger, any catalyst of good news, positive news, okay, it's not even that it's going to attract new buying that heats up a rally, a squeeze. They have to unwind all that hedging they put on. And that's why you see a lot of times these massive squeezes, right? These massive bursts, especially intraday. A lot of times you could take those, we like to look at the Niners intraday, right? In these type of climates, you get those trending days, Niners go out the window. All right, because when somebody is leaning short and they're caught, you think they're worrying about or concerned about an intraday Niner or a technical level or anything else like that getting in the way? So it's the unwind of all that, okay? And the market makers now having to hedge the opposite way, and that's what creates that snowball of momentum, and those powerful squeezes, those powerful rallies. All right, and that's the beauty of it. Okay, that's the beauty of it. Because like we were talking about a lot about, the rally from this point on, okay? And that melt up feel, and where you had a market gap up and then it just sits there and then fades through the afternoon. There was just no gusto to the upside, right? The indices were going higher, but it just didn't even feel that way. All right, and that's the ultimate sign where we need to get the bears involved again, right? The shorts lose interest. That's a lot of the juice. And that's why we see a lot of the strongest rallies, the best rallies, come out of these little, sometimes even tiny corrective phases, these small little pullbacks. Okay, because shorties, they get caught, they have to cover. Bulls, they put on a hedge, right? They put on a lot of hedges because they're concerned. Now, when a market starts pushing higher against that, they want to undo those hedges, right? They're bullish. They want to participate in the upside. All right, so just so you guys know, and I know most of you do because we talk about it every day, but if you're new, sentiment's not some imaginary indicator. It's based off real market stuff, and that's why, it works more than it doesn't. And that's the true definition of an edge. So that's what we had coming out of last weekend. We were going over that. And it started up Friday, if you remember, okay? Because the signals, if you guys remember Friday morning before the market, we talked about it. And we talked about, I think it was Wednesday, it might have been Wednesday or Thursday, that any further selling, you almost want to try to force yourself to buy something for at least the trade. All right, if you're looking to trade in this environment, that's where you want to almost force yourself to get long something into weakness for a trade. Okay, if you're going to buy anything throughout this environment, if you're going to say, oh, I'm sitting in cash, until this blows over, blah, 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 the flow cleans up, that's a different story. But if you're going to trade in this environment and you're not looking to get long something when sentiment's on your side, then the worst thing you can do is chase a rally. The worst thing. Because there you have no shot in this type of climate. All right, so that's what we had. And we had some nice squeezes, if you remember. Friday was a nice one. Even more so, I actually had a nice hit off the one. I think it was Wednesday, or was it Thursday? There was one before that Friday where I made a bigger dent. The Friday one was okay. There was one where the market gapped down at the open. Might have been Wednesday. And sat there for a bit. The flow flipped bullish. And then we had a huge squeeze. I think it might have been Wednesday. Anyway, we're going into next week with a similar setup like we had the week prior. Okay, and we'll look at some of the sentiment stuff and the reason why I can make those comments. Okay, and here's the one thing that I'm concerned about. All right, and we'll talk about this as well. I think these squeezes or sentiment are always there. Okay, just it's a matter of how much you get out of it, how much you're looking for out of it. Okay, that trade is always there, in my opinion. The only time it's not there is when you get into a panic, where the market gets into panic mode. Okay, and that's rare. It happens. We just had one late last year. Okay, that's the definition of a panic. And what you'll see there is you'll just see no buying, right? Buyers totally dry up, disappear, and you'll get bullish sentiment readings, extreme bearish sentiment readings, which mean bullish to us, but there's no buying that's coming in. Again, you have that panic selling, that liquidation. Okay, so that's the risk in where these sentiment trades aren't going to be there. Okay, but that doesn't happen a lot, obviously. So we're always going to have those trades for the most part there. What I'm trying to get a handle on here, and the only way I can do that is based off the flow, okay, from my experience, all right, because the flow to me, and that's the only thing I'm looking at, is the definition of buying. All right, if I see buying coming in, I'm going to see it in the flow. Is this low A setup for something more than just that squeeze trade? Okay, and so far to this point, and we're going to go over that, I'm not seeing it. Okay, I'm not seeing it. And if you remember, that was kind of the problem coming out of the summer last year, and then the markets rolled over in October, and then we had that squeeze trade pretty much up until December, where just things completely fell out of bed. But the same thing happened back then. There was no real buying coming in. All right, everybody was playing. The smart money was just playing for a squeeze. They were really quick. We would see them flip, calls in a matter of minutes, sometimes intraday. All right, they were being really tactical, and the size was really small. Okay, it wasn't real buying. So that's what I try to pay attention to most when we get these pullbacks. And as of right now, I mean, I'm not convinced that they're positioning for anything more than a squeeze when they come in buying. All right, that can change. All right, and that doesn't always have to change into the lows. Okay, you guys always hear me talk about the 2016 Bazooka Joe lows. Okay, that came in to the selling, right? That significant buying came into the weakness, into the lows, and was a catalyst for the turnaround. All right, that's one example. But December, okay, off that Christmas panic, the buying started off gradual and just stemmed up over a period of time. You understand? It at higher levels. All right, so as the market went up, the buying continued to get more broad, more aggressive, and we started to see that crazy size come in. Okay, there wasn't one day or a period, a couple days where we saw that buying come in. We're like, okay, they're ready. And trust me, that throughout my career, that's happened many times. All right, so at the same time, right now, as I'm not seeing anything that's telling me that they're betting on an intermediate bottom and a new leg higher, okay, that could certainly show up in coming days, coming weeks. All right. But, and it makes sense if you think about it, okay, and usually you can't tie it all together, but what I'm seeing is what, if you take a step back, okay, at the environment we're in right now, makes logical sense, okay? What it looks to me is they're looking to position for these squeezes, for these bounce trades in certain spots, not everything, right? It's not broad like the rally was earlier this year. And it's shorter term and almost lining up with that G20 meeting summit with, Trump and his buddy over there. Okay. And maybe that is playing into the account that there's a lot of uncertainty out there. Nobody has a clue what's going on, right? They realize that there's a lot of hedging. Everybody has been short. So there potentially there's limited downside over the short term and a high probability for a squeeze, but they're not looking to commit to much out there. Okay, and that's my impression right now. All right, but again, I want to make clear that can change, and that's why you don't want to get, sit on that bias or any bias for too long, especially if the evidence changes. Right, we could come in Tuesday, and all of a sudden there are missiles flying all over the yard, and they're buying everything, just like that, for no reason whatsoever, for the simple reason that maybe Trump whispered in Michael Cohen's ear that he's gonna maneuver to help soften the blow that is behind bars, right? So it doesn't have to be news, it doesn't have to be that anything changes out there, but we just want to see, that risk on aggressive nature in sweeper activity, and that's ultimately the telltale sign for me. All right, and I guess that's a perfect segue once again to, I didn't put everything we usually look at on a Saturday webinar because again, we're open to everybody here. I get bombarded with questions, but I put the basics in what all of us are interested in seeing. Okay, so here's to sum it all up, what we're looking at here. And I didn't even mention we're still in earnings season, right? We still got a couple big names left to report, a lot of software names, a lot of, hot tech names, Home Depots of the world. All right, so there's still some big earnings out there. And that also plays into account, right? That also plays a big part here. So basically, the overall flow has been mixed, and there's a lot of earnings related action out there, okay, for obvious reasons. The sweeper activity, more importantly, which in definition terms would mean momentum, okay, has leaned bullish overall. In other words, I'm seeing more bullish sweeper activity than bearish. But again, it looks like they're playing off the momentum. All right. If we're in squeeze mode, we'll see squeeze sweepers in Facebook, in AMD, and every name that's squeezing, and it'll last a whole or at least 3/4 of the day, and the board will be lit up in green. All right, but it's all short dated, cheap momentum squeeze type action. All right, so that's what we're seeing in flow right now. All right, so what's that mean to us? I mean, simple, right? It's pretty self-explanatory. That means, for me, the same exact thing. I'm looking to stay tactical. I'm looking to play for squeezes, and I'm not really looking yet to stick my neck out and get aggressive and start buying things with time like I would off any other correction that they were buying aggressively. All right. And we're going to look at what, some of these sentiment labels here and what makes them up. Short-term sentiment, we got a bullish signal off Friday's flush. Okay. Same on the NASDAQ side. We like to look at the two because this market has been weird like that, right? You get tech higher and everything else lower. They're both lining up going into early next week. The squeezometer was really nice. I think it closed down into the low 30s. We'll look at that. All right. Because that has been stubborn at times. We've been complaining about that. Put the calls, not panic. Again, there's a difference between panic, which was at the December into the December lows, right? So panic on an equity put the call would be a reading over 1. That's the definition of panic. All right. But what we're seeing is we're seeing elevated put the calls and they remain elevated. All right. And that again means that they're just continuously putting on hedges. They're nervous. All right. Protection is in vogue out there. So that's what we're seeing out of the put the calls. Okay. Intermediate term sentiment. All right. So that's more of a backdrop picture thing, longer term than short term, right? One little squeeze intraday or over the course of 2 days is not really going to make too much of a dent on the intermediate term sentiment side. So it's more of a backdrop. We were scorched, right? Absolutely scorched throughout this whole push higher. So in other words, literally at this niner, okay, the whole market here rallied through scorched intermediate term sentiment, okay? And what I mean by scorched, again, my slang I'm using out there, all the intermediate term sentiment indicators were all at extreme bullish, okay? And that's normal when you have a market a rally do what it did, right? There were no corrections like this, none throughout this whole leg higher, right? To soften those intermediate term readings, okay? So now, thanks to this setup here, we have now made a dent on all of those intermediate term sentiment readings, okay? Basically, all of them right now are at the least back to neutral, all of them. There's a few that aren't quite there yet. And we'll look at a couple, okay? Oops, I'm getting lost. All right, so that's the good thing out of this whole correction here, this pullback, is that we needed to chew out some of that bullishness over the intermediate term, and they've done that. And the last one is position sentiment, and in simple English, as a lot of you know, that means hedge funds, mutual funds, the fund flow, okay? That remains favorable, but we're losing a little bit from that, especially from hedge funds. And that's one of the things that concern me, and we'll look at that. All right. So that's how we line up. We'll take a quick look at what makes those up. Here's the short-term sentiment. Okay, you can see here. We dipped here. We had a nice rally off that. That was the rally I was talking about. That was the rally I had a nice day or two off of. This one Friday, I just wasn't positioned enough, but same thing. Okay, and now we're back here. All right, so that's what this tells us. Again, going into next week, going into Monday. All right, if the markets are gapping down, I don't care what the headline is, doesn't matter. We want to lean bullish now into weakness. Okay, now here's the difference. Friday or the day prior, okay, we didn't have this on our side. All right, so the difference is the selling could continue and we won't see that sentiment squeeze show up yet. Okay. So this, yeah, Lewis, you believe it? That's because people are uneasy. That's what it is. People are uneasy. But yeah, Lewis is saying that little flush Friday got us back where we wanted to be. All right. So again, early next week, market's flat. Even more so if there's weakness, we want to start looking for things to pick up. And especially on an intraday time frame, we start seeing sweeper activity. We start seeing those little bands. They can be squeeze sweepers too. We don't care about the quality if we're playing just for a squeeze. But once we start seeing those bands come in, that's where you just want to start grabbing something to get long. The VXX put sweepers, right? You start seeing those guys show up. Just get your hands on something. ETF, something. All right, because especially those VXX put sweepers, they're telling us the squeeze is coming. That's what those guys are telling us. All right, let's see. Squeezometer. All right, so this is an intraday indicator we look at. And this thing has been a little stubborn. And the reason why is it's based a lot off intraday price action. And if you realize there's been a lot of overnight action that's set up the day. Okay. But this is a decent reading here. Same explanation, right? Any further weakness would get this even more into high probability squeeze territory. All right. And this thing will move. Like, for example, off the rally, near its highest point, it didn't officially get into the red per se, but it'll get into the mid 60s, high 60s. And that's where we want to, put the guns back in the holster, take it easy, not put on any more risk, raise stops, right? That sort of thing. All right. So that's where the squeezometer comes in handy for intraday positioning. All right. Here's another one. They've been money. The Nova Ursa crew, okay, they got into bear mode, as you can see, into the lows. They didn't get back there yet, but it doesn't take much for them to get back there. Okay, anything, again, different. I have friends of mine who look at this a little different than I do. In bull markets, anything under that red line, I got buddies that look to buy something. All right. But me personally, when you start getting, minus 100, minus 50, that's where these guys usually get caught. All right. Again, you get full-fledged bear markets. This is what it could look like. All right. But you look at even throughout the bear market. Do you see these swings? You see these swings? That's all based off squeezes. You know what I mean? So that squeeze trade is there for the most part, no matter what. It's just a matter of how much you get out of it. But look how these guys like yo-yos. All right, so this is no signal here. Dead neutral. We had one going into last week. Oops. I'm getting a little quicker at this drawing stuff. All right, I got a couple of indicators from Sentiment Trader. Let's see, what do we got? Oh, this is just equity put to call. All right, you guys know my feeling on the equity put to call. Anything, you see a 7 handle, right? Again, mostly bull markets, uptrends, okay? Anything with a 7 handle or higher is bullish for us, right? That's a high reading. A panic, you're looking at this. This is a panic right here. They're rare. We used to see a lot more of these, though. I'm not going to lie to you. I mean, it took that whole Christmas debacle for this thing to get under 1. Remember, we were complaining about this throughout the whole fall and winter, that this thing couldn't get over 1, but it finally did. It usually does when you get into those bear market modes. All right, but for what we have now, you're looking for, again, once it gets above a 7 handle, that would be the definition of bullish. Oops. And again, I just wanted to make the point. You see how it's remained up here, right? That's more what we're seeing right now. It's sitting up above, right? You have a little dip under 7, then right back above 7. So that's telling us that off any weakness, players are lathered up in protection. All right. So a lot of people talk about like a flash crash, a crash, that type of event, right? And that's a risk when, especially you got this trade war crap. What normally would happen is they would squeeze and unwind all this stuff we're looking at before a market completely fell out of bed. So in other words, you'll get little squeeze, and these things will come back down to here, and you'll see all the other sentiment stuff get back to at least neutral, and then they would catch them. Very rare. You could probably count on 3 fingers. Very rare when these things are all elevated like this. Do you see a market follow through to the downside? This is the total put to call. Same thing, throughout the whole rally, under the 1, and we're sitting over 1. Had a high reading here, 130. You can see here is that panic in December. This is an intermediate term. All right, so it gives you a bigger picture look on it. Again, elevated. That's the takeaway from it. Fear, greed. You guys know this one. All right, so this is the definition of intermediate term to me. All right, so right here, we got up to levels where, yes, a market can rally through it, but ultimately that only means a bigger bang when that pull comes. Why? Because they catch more bulls. That's why, right? If everybody's all in and the markets continue to melt up higher or grind higher through all that all-in sentiment, that's just more people who are in. And then basically, eventually, there's no more buyers left. Any catalyst for a sell-off, and that's where people poop their bloomers. All right, so this came in the nick of time. This came in the nick of time because you don't want to see things like this. You don't want to see them, because they could get vicious and they could lead to longer corrections because they take time to wash out all that. All right, so we're at a little over 40 there. So no bullish signal there yet, but I'm happy where it is considering where we came from. All right. Here's the one, and I know you guys are interested in this one. Okay, this is concerning. All right, there's a bit of a lag on this indicator, but this is the worst case scenario where we were hoping for out of this. Okay, if you remember, well, those of you who are members will remember, we were concerned that they finally started to dip their beak. Remember we were talking about that? Ultimately, they nailed the top, which is just mind-boggling, right? We saw that update, literally days, the market topped out. All right, literally days. So what we were concerned about, sometimes they won't get shaken out. Okay, so even though they get caught, instead of spitting it back out, they decide to average down in a sense. Okay, that's what happened here. All right, and that, as you can see, short term, because they're moving money, right? Even though they're pretty bad, they've been bad timers, they move big money, put in a bottom, but ultimately they get caught and the market's going to spit them out. You know what I mean? So they were buying, they got caught into this pull here, okay, they started to buy and they got caught and they added, right, into this whole thing here, and then whoop, spit them out. So I'm not going to lie to you. This concerns me, again, about that follow through on this rally. I don't have enough information, because it doesn't happen a lot. It doesn't happen a lot, this type of event where they continue to buy. Okay. But like I said, I wouldn't necessarily be concerned about it yet. It almost could be a bullish thing over the short term, because they're by Yosti saying, is it possible they finally get it right? It is, Yosti. It definitely is. They haven't been right in a long time. But it's possible. Again, these guys once upon a time were considered smart money. You know what I mean? They were considered smart money. It's post Armageddon 2008, post QE, that they've been awful. And the reason why, for the most part, they've chased price action. You know what I mean? They've chased price action. So, and the rumor is, again, you guys heard me say, it's that QE really played a big part in screwing up their models. Okay, because they're long, short, right? They like to get creative. And when you have a QE environment, you're chasing green. So these extremes have been sell signals because they've lined up, with price action at highs, except for these rare occasions like this. All right. So again, Yosi, I don't have enough information. You know what I mean? This hasn't happened enough for me to say, oh, don't get your hopes up. It just hasn't happened enough. But again, I would have rather, as we spoke about, I would have rather they spit it up, right? Oh, trade deal off, sell everything. That's what we would have rather. Raise cash. But you can see where it could get to too. So there's more, right? This thing is still not technically even over that red line that Sentiment Trader has. But you could see where this thing can get to. I mean, this was an all-out chase here when they got left behind. That was the melt up in 2017. But once you start getting up here, that's where they're dead. Right, exactly, Ani. Right. You would rather that fat pitch setup where the market has shaken out everybody. And here's the logic. Why? Okay, here's the problem. All right. Just so you know the reason why too, Yosti. Here's the problem. What we're banking on when sentiment signals light up green, we're banking on there's nobody left to sell. Everybody's all in protection. Whoever wanted to sell, they sold. There's nobody left to sell. The problem is when this thing spikes, if these guys are forced to sell, okay? If these guys are forced to sell for some reason, and it could be just price action, like here, again, they move big money. And especially with today's liquidity in markets, they can hammer markets, okay? And you don't have to be a market aficionado to know that this definitely had an influence on that November rollover into December. They were going out of business, remember? The liquidations? Remember the numbers being thrown around? Right, so when the liquidity out there sucks as it is, and you get just liquidation, that's where it can become a problem. So that's where, like Ani's saying, the best case scenario would be that they're not in with other sentiment indicators lining up bullish, because then we know sellers are done for the most part. So that's the logic behind, why we don't want this. Okay, because if they're forced to get out, it makes dents. It can make a dent. You can't see it here because this is stretched out here, but when they're forced to get out, it weighs on markets. So we'll see. Again, we'll keep an eye on it. I don't think it's anything to be concerned about yet, but that's one thing that definitely concerns me. Oh, the VIX thing I didn't put on here. I have it here. What do you guys want to see? The VIX. Let's see the VIX. Good call. Did they unwind any of that? Let's see. Because that was another thing we were looking at, right? Smart money buying VIX throughout the weakness. And even though a lot of people were saying it wasn't as clean, it was hedged, but still, you'd rather not see it. Let's see. I got it here. I'll post it. Oh, I got a better chart. Let me see if you guys can make this out. Hold on. But good call. I should have threw that VIX on there too. Because that's definitely something we want to see unwound. All right, here we go. Let's see, how's it? You get the picture. Because I had to do it through mobile here. So here is what went on here. This is the smart money, the black line. Excuse me. The black line is the smart money. Yeah, the blue money is the blue line is the dumb money. Okay, they were shorting VIX futures while the smart money was accumulating VIX futures, and you can see where we're at now. So they unwound a good portion of it. Decent unwind this week too. You could see right here if you can make that out. The other stuff, the hedges and all that stuff we were looking at, there's nothing there to look at. Not much of a change. That's why I really didn't post any of it. Yeah, again, if this was members only, I would have posted all that stuff, but we got new folk on here. I don't want to blow their heads off. That's too much. All right, so there you go. All right, there you go. There's the one other thing, and those of you who are members are probably ready to ask it. The other thing that we were concerned about, right? We were concerned about three things while the market was near highs. This intermediate term sentiment scorched, and one that was probably the most concerning to me, small spec call buying, out of the money speculation. Remember we were talking about that? So that hasn't updated. When that updates, I'll get members, I'll bring your attention to it. I'm hoping some of that air came out too. Okay. So again, the things that for the most part were concerning have alleviated with this pullback. This is the only thing I think we need to keep an eye on. But Yosti raised a good point, and maybe they're right this time around. I don't like to hold out hope on certain things, but it's something we got to keep an eye on. That's all. Yeah, I will definitely post it. All right. And now listen, here's the thing, right? If sweeper activity was really impressive, okay, then the little things that concern me wouldn't concern me as much. Okay. The problem is when I see something concerning, and again, we're talking about more than the squeeze here. Okay. We're talking about where we utilize these short-term bullish sentiment signals to tuck stuff away. Remember, we were doing that a lot. We would see a sharp activity in QSR, remember? And we just buy it with time, right? it didn't matter. If there was time and it was a missile, we just would tuck it away into weakness. That's what you like to do out of these corrective phases, right? Because that's where you can make some money in off of positions. The problem here now is we're not seeing any of that. We're not seeing any of that, any of it. Okay, we see one decent order in a name, and that's it. You never see action in that name ever again. All right, and you throw earnings into the equation and all the rest of the stuff going on right now. One order can mean anything. It can mean anything. All right, if you remember the action that we were paying attention to coming out of the correction, okay, again, it could be obscure names. It doesn't matter if there's enough of it, right? SE, what they do? Bullish risk reversal, right? Stock did nothing for a couple days. They come in again, sweeping calls. Okay, they come in again, sell puts. They come in again, and they hammer and hammer and hammer. You know, that's the real buying out there. And the same thing, QSR. Remember, we were calling them Ackman missiles, right? The stock is mangled. What happens? Boom, they come in. Huge call spreads. Boom, sweeper activity. Boom, risk reversal. And it doesn't matter that the stock wasn't really doing much, right? Up, down, up, down. They were tattooing it. All right, so the more you see of that, then you say, all right, you know, this rally is real now, right? This is not just some bear market squeeze anymore, right? The short money out there, they're getting aggressive now in the options market. And if they're doing that, you know that they're aggressive in equities, okay? Because that's usually the cherry on top, what they're doing in the option market. That's the confirmation of risk on that they're taking that approach. So right now, like we're not seeing any of that. Any. That's the problem with that. And I don't know. Again, I don't know. Maybe I'm looking into it too much and over exaggerating it. You know, because again, it's earnings season. So any big order that you see tied to earnings, you're thinking it's earnings. You know, so maybe that's throwing a wrench into things. But there's not one individual name out there. I'm not talking about one. Okay, one. There's not one individual name out there that I'm saying, wow, they're really, you know which one? You know which one? Okay. This one, all right. A blown up energy name. Like, this is the one. Right? This is the one. Probably the last thing we want to build and continue to build a size position in. Freaking energy name out of all things. But, you know, this is the only one. So that's the problem here. That's the problem. Okay. And, you know, it can't be just one, right? If you want to see bullish signs out of these guys that they're getting aggressive, you want to see them at least, okay, let's say it's energy, fine. You guys want to get aggressive in energy? It's great. But at least find something else too. Give us confirmation that the sector's going to be in play. So we at least have a shot. We can have some confidence. This is the only one. So that's what worries me. Again, not about the short term and the squeezes. They're going to be there. So if you're playing for those, don't let any of what I'm saying worry you. You know, I'm talking about beyond that. Okay. And if you think about all the activity that's been coming in, right? Because I'm making it sound like there's no bullish activity. That's not the case. There were several days early last week where the board was lit up all green, right? We were talking about. The problem is, look what they're buying. You know, look what they're buying. They're aggressively sweeping cheap weekly bi-weeklies. You know, you can see they're just playing right now. They're playing. I mean, look, well, it was Citron, but you see, like Beyond, there was, you see that aggressive put activity came in, and then we see them flipping it like 10 minutes later. But again, that ended up being Citron in the news. But that's what they've been doing a lot of, right? We see them closing out things. How about this? Neil Diamond. He closed them out into the rip. That's not what we want to see. Right? That's not confidence, is it? And Neil Diamond comes in, he bangs, bangs, bangs. He catches a dip. He's going to bang some more. He's trading. They're trading. And that's fine. But, you know, we just want to be careful sticking out our necks on our own, because there could be a reason, right? There could be a reason why, there likely is a reason why they're not buying the way we would like them to buy. All right, so that's it. The name of the game is you stay tactical, you know, play for squeezes, and we got to be prudent about it. Right, exactly. Usually he's holding, you know, this guy, usually when we're selling for a double, he gets a quadruple out of it, right? So, but again, that's what's lacking, and you know, that's okay. That's what I'm saying. The sweeper activity doesn't always have to be bullish when you want it to be useful. Right? Sometimes it tells you a little bit more about what may be going on, and it'll stick out like a sore thumb when that switch gets flipped. Okay. And here's another thing too. Okay. You look at like the health of the overall market. It doesn't look too good right now. All right. What we were hoping, remember, we wanted this pull. Okay. We wanted this to be a catalyst for them coming out of the hot stuff, right? The semis, all that stuff that just went parabolic, and rotate. Remember my famous last words. Remind me, every time I get excited about potential rotation, I put the kibosh on it completely. Completely. Every time I get excited about it. Okay? But that's what we were hoping for. So what happened? Not only did they take in the hot stuff, the stuff that we were hoping they rotate into, they sold even harder. They sold even harder. You know, so that's not healthy. Again, well, if you remember the rally, okay, and what got us all excited over here was how broad the sweeper activity was. Okay, instead of just missiles in Facebook, which caught missiles, there was sweeper activity in a gazillion different things. Semiconductors, beating down construction names, railroads, transportation, software, casinos, right? They were buying everything. We were joking around. You could have thrown a dart at a sweeper then and just got lucky and be right, because that's how broad and healthy the flow was. That's not happening right now. Now they're buying Facebook, and you look behind the scenes and they're selling the living daylights out of Google, right? Or Amazon. Facebook's up, Amazon's down, Caterpillar's down every day, MMM can't catch a bid. That's not healthy. That's not healthy. You only could go so far. Now, what the glass half full is, if it doesn't mean this has to continue for a long time. And that's the beauty of this game. It can change any day, right? We could come in Tuesday and all of a sudden they light up a sector, right? They light up biotech, so they light up the casinos again off a dip, or they light up energy, or they light up the Caterpillars of the world. Remember we were talking about, at least I was, I was like, oh, this Caterpillar is setting up so lovely for missiles right now. You know, setting up so lovely in this annoying chop, been consolidating nicely, right? Then finally you get this dip. You're hoping they come in, step in and buy and step in. No buying to be found. Nothing. No buyers. Maybe it reaches a point where they show up, but what I was hoping for, the rotation into this, never came. Right? It never came. They made you for what? Roku you had to chase? Right? Disney, right? Disney. Even the software names, it's the same old stuff. Yeah, there was a big a block on Caterpillar, most likely rolling out Maze. That's not, you know that, AS. That's not what I'm talking about. I'm talking about at the least, $500,000 sweep, if not a couple of them, when they buy Caterpillar. You know, a couple of them. And even you see, right, the good looking action you see in the net, like for example, the one sweep I was oohing and ahhing about late last week, right? What was I oohing? Zoom. I mean, it's not even initial sweeper activity, right? It's not initial sweeper activity. It was a missile, but you know, this like Zoom, they're buying again. You know, so it's just not there. It's not there. It's not there. The same names catch and flow, but we'll see. That can turn. All right, but like I said, I mean, my game plan now, for the time being, until we start to see that, is play for the squeezes. That's it. You know, play for the squeezes, and then sometimes these squeezes can last. You know, you get that squeeze set up for a couple days. For intraday day trading, as you guys know, it's a nice setup. You know, because we have some volatility, so the movement is worthy enough, right? I've been playing the degenerate ETFs because you guys know I don't day trade options. You know, I like to swing trade options, but I've been day trading like the TQQQs and stuff like that. When I got that squeeze set up, that's what I'll be looking to do next week. So everyone's different, but if you're, you know, if you're on my page and you're looking for what is coming out of the flow and out of sentiment and what it's lining up going into next week, again, off any weakness, play for a squeeze. You get the squeeze. It depends what you're playing. Options, you know, raise a stop if you're playing equity, roll, or just lock up the profit. But try not to get too carried away until we see signs out of flow telling us or hinting to us that we should. Make sense? All right, I see questions on here. Well, I have the screen up. I couldn't see them, but anybody have any questions? Let me see if I could scroll through them here. Hold on. Oh, let me get this in chronological order, damn it. There we go. Yes, all right, cool, AS, you understand. IPO activity, well, IPOs, you know, especially for momentum purposes, they're great. They're great. Like this Zoom doesn't catch a lot of sweeper activity, but two sweeps in particular were missiles. Missiles. You know, so they can move. But the problem is when they've been moving already and you got to chase what to look for. You know what I mean? Because you get greedy in these things. That's the problem. This was the bet here. You know, AS, that's what we want to see in Caterpillar. You know, that's exactly what we want to see in Cat. This. And this is an IPO So it's even more noteworthy in an IPO, obviously. You know, CAT could get some size. But look at this, $500,000 sweep, sweeps multiple exchanges. This is it's a hefty bet right there. And like I said, that's not even initial activity. There was one, you guys remember, a lot of us, well, I didn't play it like an idiot, but a lot of you guys played it, sold it early, but whatever, you made money. Oh no, this is the one Friday. Torpedo. I label a torpedo, I'm sorry. Where is the initial sweep on this thing? Let me see if I can find it. There, no, May 16th. That's not it. Oh, I can't go back. Nah, whatever. I can't go back. But there was one, as you guys know, there was one, I think, coming out of this, right? Coming out of this. I think it was the beginning of the month. You're still in ZM, Gordon? Yeah, unless this market completely falls apart, at the least, you should see 100 from here, right? 90 bucks. Yeah, that's what we were saying down there. Yeah, that's smart. Sell half, let the other half go. That's smart. What else? We can even talk about some names. Let's talk about some names, what you guys are eyeing, what maybe you saw action in. Oh, Tim's saying he's got everything. He found the ZM sweep. You're posting it in the room? Oh, there it is. June 85 calls, Tim. They were June 80. That's it. Yep, that's it. June 85 is May 1st, he's saying, right here. Yeah, beginning of the month. That's it. That was the first sweep in Zoom. KSU, that was nice action. A risk reversal. I personally would like to see sweepers just confirm it. In other words, you always worry about stock replacement if it's just that. But it was significant. It was a significant bet. This thing's been hot. This whole sector's been unconscious. This thing finally starting to move. This was a laggard out of the group. And there were missiles in the other guys, NSC. Oops, let me move this out of the way. This one caught some big sweeps. UNP. Look, they're all healthy. CSX. You know, they've been healthy. The only thing I would say about it on the KSU, Sean, is that it's not initial activity, but if you're looking for just a trade out of it type thing, it's worthy of that. You know, there's been in an uptrend type thing. You know what I mean? Repeat activity. Xilinx, I haven't seen. Oh, we saw put action actually. We saw some put action. I haven't looked at. Oh wow. Oh yeah, they warned off earnings. I forgot about Xilinx. I haven't seen any call activity. No. By the way, the semis, okay, and you Steam Room members know exactly what I'm talking about. Remember we were talking about. Remember that the whole sector was scorched, and blah blah blah. How do you buy them and all that? Can you believe they're finally the sector sentiment is a buy signal? Can you believe it? That happened quick, huh? Buy signal already. Look at this. Okay. So remember, like up here, we were saying, like, what do you do with these things now, right? It's been a nice wash. But yeah, the sector, the semis, again, I'll post it later on. Again, was too hot. Now buy signal all Friday. Yeah, SWKS too. That could have beaten. You know, I guess it's all trade war stuff. All trade war stuff. You know, maybe they come into these things hard off this pull. We know they can, right? Right? They hit that LRCX. Meanwhile, this one didn't even pull. I don't know why. Look at this. But remember how hard they hit this thing? PFD, I don't have to remind you. This thing caught huge action. This didn't pull back much, though. This just still looks good, right? Still uptrending. I guess maybe they don't have, I thought they do have Apple ties. Because I know the SWKS is getting smoked because of that. How about NXPI? There was some action there recently, October's, but it looks, they got a lot of May in open interest to push out. But this doesn't look too bad. We'll see. Again, hopefully they come in and buy something. It could be these. Yeah, Micron caught a little bit of action. The problem with the action in some of these semis this past week, May, there's a ton of May calls from off this rally that they were replacing in open interest. So next week would be the telltale sign on these things. If the buying continues, maybe we have a setup there. Because a lot of these things have come in a decent amount. A lot of these things. How about Texas Instruments? That's another one I missed off the rally. Look at that. Yeah, these things are worth a look. NVIDIA. Oh, yeah, she turned red, right? You had a niner before earnings. Yeah, we were looking at that. Good sign, good sign out there. You got a lot of niners out there, green niners. If you remember, that was another thing we were worried about, the red niners all over the place. Remember, MJ? There were red niners all over the yard. More and more green niners now starting to pop up, MJ. More and more green niners. So I think my gut opinion here's honestly, and again, I don't hold too much water on my gut, so don't any of you. But what I think we get these squeezes like we've been getting, okay, off sentiment, and for a couple weeks to like towards the end of the month, and then that's where I think we get the real answer out of what we have on our hands with this market. Now, I don't know how the trade war is going to fit into that. I don't know if it matters, but I think what's going to happen is you're going to have people, they're going to try to flush it. They're going to try to bring it, and you're going to get this choppy grind, to set up like an intermediate top thing. And then at the end of the month, we're going to get an answer to that, whether we go whoop or, we're back on, game on. Right? Makes sense, doesn't it, too, with everything the way it's lined up? So that could be, they're staying tactical, they're playing squeezes and all that fun stuff in here. And then, we'll see who grabs the bull. Right, it lines up with that G20 meeting. I don't know, not that we're going to get an answer out of that meeting or anything. Yeah, with Xi and Trump. But, I'm more concerned with the flow and the price action out of there. But that's the way it's likely to line up here. It's just a matter of where we get to, Probably the 290-ish area, probably around here we can chop around a little. But again, if we focus on weakness, right, the flushes to buy, and then we could get trades out of them. So that's what we're hoping for. But I wouldn't use that as a playbook if something changes in flow. So yeah, Huawei now is the new issue. That's what the set some of these semis too into sell mode on Friday. That whole Huawei thingy. Yeah, it's a mess out there, PFD. It's a mess. It's a mess. It's a mess. But here's the way I look at it. Okay, again, call me a glass half full guy. If you had a resolution to the trade war, I think it was game over, guys. Game over. okay, you would have had possibly a little further melt up. The economy would have started to rip, and then you would have had the Fed back in play, and it's all over. You don't understand. The wall of worry was gone. Now you got the Fed put, you got the Trump put. You understand? So you got some stuff underneath here. So it came in the nick of time, that deal falling through. Yeah, I'm saying even if there was some, excuse my French, bullshit resolution, I think it would have been, that's it, kaput. Just like the tax cuts. Remember the tax cuts? Once they finally got put into place, that's when everybody got euphoric, and that's when the market topped out, and look what happened. You want that fear. You have to have the bears involved. You have to have them involved. When you get into melt up mode with no wall of worry, nothing to worry about, and everything looks, what's that line they use? That when you hear it, you poop yourself. When it's perfect, not hunky dory. The one they use in markets. No, I don't think it's sweet spot. It's something else. Whatever. No, when everything, Goldilocks. Good call, Ryan. Goldilocks. Goldilocks means start building your bunker. That's what it means. Goldilocks, right? Right after the tax cuts, Goldilocks scenario, the tax cuts are going to do this, they're going to do that. You like hunky dory better? Yeah, and that's when things unravel, right? All the good news is baked in. You have no bears involved, and then any bad news that pops up, it's not factored in. We were close. I'm telling you, you don't realize how close we were to that. Okay, we already, think about that. Everyone was baking in the trade war like it was, the trade deal like it was already done. And that's where the risk comes, because then you don't get a trade deal and the market's got to price that in. So, but anyway, listen, as of now, we have a playbook and we got some things to keep an eye on, and we're going to learn more and more as things come out. But we want to be smart about it. We want to be smart about it here, and just trade. Yeah, listen, as long as you have that bearishness involved, again, you can be bullish, right? You can remain bullish. But the problem is when the market squeezes, okay, and it shakes out all those bears, that's where the problem comes in. So it's okay when you got, like we're seeing now, we got sentiment on our side, right? You want to get a little more aggressive than usual, that's fine. But what happens is when we squeeze, then what, right? When the market lifts, let's say you're buying here aggressively, right? And then you get a rally here, okay? If you're not taking that off the table, you run the same risk as you were anywhere else where you don't have sentiment on your side anymore. All right, so you're looking for the breakout, everything looks good, you don't have sentiment anymore, and then boop, you get that rollover. What's funny? In 2007, right before Armageddon, okay, I remember there was some negative news, whatever the case may be, the mortgage crisis, okay? Remember the subprime stuff? All right, you had a wash similar to this, might have been worse, okay? And then you had sentiment line up, everybody was bearish, same thing we're seeing now, okay? Markets rallied, squeezed right in the face of it to new highs, right to the new high spot, just like this, okay? And as the market rallied, people started getting bullish again, even though the subprime crisis was still around, and they started saying, oh, the subprime crisis is contained. It's the size of Texas. You don't have to worry about it, blah, blah, blah. And you didn't have that sentiment backdrop anymore, right? Everybody was talking about new highs. They didn't worry about subprime, just like now. The trade war, maybe it's not going to affect the economy. Once you lose sentiment, that's when things can get scary. Okay, so that's why for me, the flow tells me that additional piece of information. Okay, if I see the flow, then I see people committing to money there. I feel better about it, right? The smart money's buying stuff here. But if I don't, and you're betting on a trade deal happening as the rally and you lose that sentiment, that's where you can get caught, and that's where bad things can happen. So that's the point I'm trying to make. The squeeze, I think the squeeze we have, again, as long as the stuff we're looking at now on the sentiment front is there, we have that squeeze potential no matter what. Home builders, yeah, that was a spot too that they unloaded on early on in that rally. I haven't seen much of anything. I haven't seen much of anything new there, significant, Max. DHI had a little flow. Zillow, they've been buying some of. Z. Yeah, Lennar, though, Lennar could get some big bets. I haven't seen anything big. RNG, that's a software name. That thing's been unconscious. You remember this one, Maria? Jesus. This looks good. I mean, stretched, but it looks good. But these are the things they're piling into, Maria, right now. These are the things they're piling into. The trade war doesn't affect them. But the only problem is they're crowded. They're crowded, TTD, let's see. Oh, you had a nice dip there. Yeah, this still looks good. Again, just was stretched. These things, well, Twilio, same thing. Look. Yeah, look at this. Stretched. See, here's the thing, Yosti, about these stocks. I don't want to, you guys get the impression I don't like them. Here's the problem. Wait, you're going to buy Twilio here now? That's like buying Twilio here. That's like buying Twilio here. You know what I mean? It's tough. Now, maybe you get a market squeeze and this thing gets hot. There's the possibility, but look at every time since this thing has been late in this rally cycle. If you bought highs, light your money on fire. Right, you light your money on fire. Yeah, but I've also, listen, I'm wrong a lot, as you guys know, by not buying these things. This SE catches non-stop flow. It's not the easiest trade though, right? There's a lot of chop, there's a lot of sideways, there's a lot of shakeouts. But what do you expect from something that went from 10 to 30 in 5 months? What do you expect? Yeah, Ani, that's the problem I had. The individual names, I just can't get excited. I can't get excited about them. Again, trades, right? That's what they are to me, trades. But MJ, we spoke about this the whole week. If I'm going to play for a squeeze, yeah, I'd rather make a bet on the markets and know that I'll be right if I catch the squeeze. Right? If I buy, look at this, okay? CRM has been the beast of all beasts, right? Okay? But let's say you buy CRM off that awesome setup we had last week. Okay, that one day where we had a perfect setup for a squeeze. You bought CRM because it's been the best stock out there for bounces, and you guys know why. And you get a downgrade of somebody else in the group, or somebody else missed earnings, or the stock was down 5. Can you imagine now? You played for the squeeze. off sentiment. You were right. The market ripped and CRM was down 5. I can't deal with that, guys. Not in this setup right now. In this environment, I can't deal with that. Yeah, you want to bash your computer into pieces. I'm saying if you're playing for the squeeze, all right? If you're buying a Twilio because you like the name and you think it's going to rip higher no matter what the market's going to do, that's a whole different ballgame. I'm just talking about, you see this here, what we have now, okay? These signals, all right? This is telling us early next week, we should get the buy tickets ready. I can't buy these names. I can't do it. Because if something happens, if that happens to me, right, and I lose money and the market squeeze where I should make money, that's what F's my head up. I can't do that. I'd rather take this safer approach. Okay, if I'm right, at least I get paid and wait for the setup again. Okay, now, you know me, I'm an individual name guy. I love individual names. They start throwing missiles all over the yard, come talk to me. ETFs go out the window. But right now, playing for the squeeze, the tactical squeeze in markets, just make sure you better have enough confidence what you're buying is going to squeeze. Otherwise, if you never experienced that frustration that I'm explaining to you, you don't want to. That's when you start losing your mind. You start looking for something else to buy to offset that loss because you were right and now you're losing money. You want to kill somebody. Yeah, it depends. Again, AS, it depends on the individual, right? It depends how you're looking to play it. Some people play SPX. They like playing that for squeezes. You gotta learn about yourself, what you're looking to do, and you're gonna have a playbook for it. Okay? A lot of us, you see us in the room, we like to, even on an intraday basis, hop on these TQQQs and stuff, right? The SPXLs, and try to milk those. Or, ES, SPY, right? Here's the thing though, with SPY calls, people don't like to play it because there's not enough oomph in them, right? You guys know. The greed comes in. You want to break the bank. That's the problem. But yeah, if you want to take a prudent, basically the question you ask yourself, AS, if I'm right and the market squeezes shorties, where am I going to make the money? What do I have the most confidence in? If you go, just understand, if you're going to lean to individual names, there's more risk, but maybe the reward is worth it, right? Maybe you think if we squeeze, Twilio can rip 15 points. So it's all really, again, it's about you. I wish I could answer that question, AS, If the flow is in there intraday for the indexes, are you solely playing the mark for leverage ETFs? Yeah, well, that's a good question. Good question, Sean. Sean's talking about intraday. Let's say the flow's bullish, right? Let's say Monday we have a little weakness early on, right? And what Sean's talking about, they come in and they're sweeping AMD weeklies, Facebook, Amazon, Apple, Bank of America, right? The algos, whatever they're doing. There's not a good-looking bet in an ETF, which a lot of times they'll throw ETF action in, but let's say there's nothing yet. Yeah, if they're hitting tech, I'll buy some TQQQ, Sean. I'll buy some TQQQ, and if I'm looking to catch one of those like trending squeeze days, I'll stay a little smaller so I can stay loose, and I'll try to like ride it out and trade around it. You know what I mean? But that's a good question. Yeah, so that's a good question. A good point he's raising, because when you're in this environment, again, you just want to see them sweeping call side, right? You want to see that pace. It doesn't even matter what they're buying for the reasons we just mentioned. You just want to see them help create momentum in the markets. So it doesn't even matter, if the flow's not sharp, if the flow's not quality, like we're saying, that doesn't matter, because it's still going to create momentum, the here and the now. But that's a good point you bring up, Sean. Tim is talking about moon. What are you talking about here? Full moon today? What's that mean? You following moons now too? Oh, you're joking? I don't know who's joking. Yeah, Vinny Boombots is the moon analyst in the room. Is it? Buy signal on the moons. Hey ya. Yeah, I remember I saw on Twitter, there was like 4 moon signals and they were on the money. And I saw everybody on Twitter talking about the moon setup, whatever the indicator. And there was a sell signal. I remember it too. It was so funny. And I was saying to myself, watch what happens to these poor moon bastards right here. It was like right around here. Look, there was a moon sell signal and they were all talking about it. Oh no, it was over here. It was early on in the rally, whatever. And then, so they were all talking about shorting and they got run over. But they had a chart on there. It looked pretty accurate over the last few anyway. But yeah, I don't follow moons. He's joking around, him, by the way. I'm going to start howling. We're going to start howling buy signals. You know what's funny? You could. Here, watch this. You want to see something funny? There you go. Easy peasy. There you go. All right. Here's your moons. So there's no signal on SPY here. Oh, here it is. Sell signal here. This was a buy signal. This was a sell signal. I think they just throw these around randomly, if you ask me. Look at this. Every so often, buy signal, sell signal. The buy signal's higher than sell signal sometimes. Anyway, easy peasy, George, on TradingView. What else we got? Anybody want to add anything else before we wrap it up here? Sean, this whole Triple Crown horsing thing, that first race destroyed everything. I mean, don't get me wrong, I'm still a degenerate. I'm still going to bet it. But, that whole takedown was so disappointing. I mean, in a way, they had to, but they did. It was just a mess. Just an absolute mess. Ruined the whole thing, Who's buying Bitcoin? There's been some Uber. You guys are going to laugh because I keep forgetting how to pronounce it. There's been Uber sweepers, but they've been kind of playing both sides. Nothing. And it was all for rally. I tell you what you want to see. You want to see either come in call sweep or breather call sweep. As it's going up over here, you don't want to chase. Uber. Oh, did they? They worked out Friday? I didn't pay attention to them. Wait, Friday or? Oh, Friday. Yeah, there was Friday. June 14th, 43 calls. Yeah. There were a couple of little sweeps. But what you want to see if for position type thing, like the Zoom, you want to see it chill out or down on a down day, and you want to see them go boom with some size. There were 3 sweeps? Oh, 3 little ones, right? Yeah, I remember. Now, one more question about Uber. Do they have earnings or anything like that over the short term? No. Interesting, Yosti. Interesting. You know, maybe something you don't really need the market, right? This thing can march to the beat of its own drum. Yeah, Tim just posted one May 24th, $44 calls at 11:47 a.m. Let's see, that was Friday, you're saying? So it was over here, of this dip, Thursday. Oh, yeah, she was running. I remember that guy. I thought you meant Friday. That was over here, right? Yeah, I had a nice rip after that. Yeah, but Yost, that's what I would look for if you want to take a nice shot, kind of like that Zoom, where you could give it a little bit of a leash instead of just a quick trade. That's what usually they do with these IPOs. They'll hang out over here, right? So they'll trade in a range in between here, and you want to see one of those like Zoom looking sweeps, right? Or a couple little ones, and then Citron guess. You believe that Beyond? Tim, were you around Friday? I think you missed that, right? You left. Did you see what Citron did with that Beyond? Crazy. So on Friday, in the middle of the afternoon, flow was like mixed, quiet. All of a sudden, we see Beyond put sweeper activity come in, quite a few of them for Friday's expiration, expiring in a couple hours. You know, it just looked weird, right? Right here it came in. Just looked weird. And a couple people played it. Even a couple sweeps flipped it. They doubled their money in literally 3 minutes. 3 minutes, one sweeper doubled his money. And then Citron came out. It did. I can't believe I didn't pick up on that thinking Citron. It didn't even enter my mind. You know that? I don't know why. It didn't even enter my mind. I was sleeping. It didn't even enter my mind. I don't know. And it had Citron written all over it. I didn't even think about that. Yeah. But so, you know, hopefully there'll be some more stuff to trade like that out there. There hasn't even been spec action. But next week, May expiration out the window, we should get at least a little action to trade off of, you know, to at least trade off of. Buddy, who was in at 90.95 puts for the day, he sold before the Citron, before. Oh, God. He must be sick. He must feel like PFD, who had SPY puts and got chopped up before the pull. I did. That was mean, PFD. I won't do that anymore. That was mean. We were talking about it earlier. Oh, yeah, PFD, we got William Bullstruck in the room. He's a Rays fan, so you can bust his chops a little bit. There you go. I just blew you up now. All right, guys. I'll leave you to your Saturday. Again, Monday, get some buy tickets ready, right? Get the buy tickets ready. We'll do some buying, maybe a little gap downage at the open. Help us out a little bit. And just try to remain tactical. That's all. But when we have this on our side here, the squeezes are not too far away, and you know they're not bad, right? I don't mind them at one bit, like trading just off these things. So we just got to be quicker until the flow clears up. Yeah, we got some nice weather on the East Coast here in New York, so enjoy it before we get snow in a week. It wouldn't surprise me. Be good, everybody. I'll see you next week. Enjoy the weekend.